Hello traders, it's 8:06. I'm 6 minutes late. I'm sorry. Just a new PC and a lot of settings that just crop up right before the broadcast. Didn't do a full test. That's my fault. Lack of preparedness is a high probability of failure. Starting on time today was a failure. It's on me. It is Monday, the 3rd of December, 2018. We are coming into a day that's got a lot of news behind it, as we had expected. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, as you may have guessed it, the market stance, the sentiment this morning is risk on. The leader today is crude oil. Crude oil up 4%, 4.24% since Friday's settlement. We're trading January 2019 crude. And there's a lot of chatter on the news feed. Those of you who have a news feed, you probably heard the discussion or the press releases by both the Russians and the Saudis regarding this week's OPEC meeting in Vienna, and that Saudi wants an equal cut across members, and Russia's saying, we're only cutting X number of barrels, 150,000 barrels per day for Russia. Also, if you have not heard, Qatar, which is another oil producer, is looking at leaving OPEC. So it's there's a lot going on there. Of course, prices dropping, money being lost, and therefore stress is rising in those regions that export oil. So oil's the leader today, followed by the DAX. The DAX is up 2.2%, up 250 points. That's a lot. The Nasdaq's up 2%. The Dow's up 1.71%, 436 points. The Dow got as high as the 26,080-ish. So it's about 90 points off its high. The S&P is gapping up. It's plus 40 points this morning, 1.5%. Risk is firmly on following. What music? I don't have music. Music. Are you guys hearing music? Anyway. Um, Jeez. Uh, anyway, it's a new computer, so I'm not really 100% on what's doing what right now, but I don't believe I have music on my side. Um, my voice to you is just musical, operatic, maybe, just Pavarotti in the flesh. Um, so what are we doing today? We're looking at a huge gap up on news of the President Trump and Xi meeting regarding trade with a potential with a potential of a concession that would prevent the Trump administration from imposing a 25% tariff in January over $200 billion worth of imports. And this morning, the president's tweeting that the 40% tariff on cars coming in to China is likely to be taken off. Tremendous deal, as he says. The details are not clear yet, but in either case, tariff wars are just not a thing that is going to serve anybody, and so the market likes this news and is gapping up. This is, of course, following last week's Powell announcement with regards to how close we are to being neutral. And so plenty of bullish news here. The market's popping. It's squeezed through. Like Friday, it was just a big squeeze in the S&P. Let's take a look at what's ahead of us for today. We're looking for Market PMI manufacturing at 9:45 Eastern, construction spending at 10, ISM manufacturing at 10, and ISM prices paid. We're also getting some automobile numbers today at 3:30 Eastern. So look out for that. Again, this is a news-driven market, so we're going to hear chatter throughout the day of press releases. Treasury Secretary Mnuchin is having a press conference and is speaking a lot about trade and so on. So that's also kind of driving things a little bit. Um, that's what we have in front of us for today. What do we have in terms of what was expected Friday? Friday, I was looking for a push into the 2740 area or so, 2745, and I was looking for the market to actually push lower, looking for the low to be broken and for us to start moving towards that 271750 for a bounce. I expected a pretty tame day. The secondary scenario was a push down into the LVN and the overnight low at 2729, which is also the MC point of control area for a bounce, and then to push towards the prior day's high at 2754, but remain in range. Both of those were way off. Here's what we saw on Friday. So we pushed to 2748. Remember, 2745 was expected to be resistance for a rotation down. So this looked to me like the primary scenario was getting into play, and it didn't quite play out. So instead, we pulled back to the open, continued the range extension up, and then just continued to push up. And we closed just two ticks from the high. Very bullish day on Friday. Multiple distributions, multiple high volume nodes with the point of control near highs. You can see that this is a classic trend day, and we were making our way. We had made our way above the 2750 again. We did fight this stock zone for quite a bit, and we were released to the upside to the next stock zone. I talked about these two areas here being relatively important in terms of initial resistance, and we ended up finishing right in the upper stock zone. But this morning we are, so that's Friday. However, this morning we have this really big gap on the open from Friday's high, 2764 and a quarter close, 2793 and a half open, 30-point gap and a push. We pushed up real quick, pulled back, retested that high, and then consolidated and finally got our extension move. So this is an impulse here, consolidation flag, break higher, and now we are correcting slightly. The overnight session had heavy volume at 321,000, about 3 times, a little 2.5 times the mode of overnight volume in this product, and has come off. And what we have is a distribution that shows lack of consensus. We are below mid VWAP, and we have recently pushed the range down. We're consolidating after an impulse down here. We are stuck at the century figure at 2,800. So this is a pretty precarious area for us to be in right now. So making this open a little tricky to read. Looking at the big picture, on the minis, the 200 moving average as well as the 50 moving average are just above us. We are trading in the range of where we were in February. We're still in this big balance zone. Remember, we just left 27.50 behind us, the most valuable price or the most traded price in this area. So we're not far removed from total balance here. The key figure above is 28.20. 28.20. If you look here, we tested, we pulled back to 28.18 last time. We made a low. We pulled back to 28.1750, 28.19 and a quarter, 28.1750, and then we put in a higher low. And so what we have here is a kind of a triangle formation long term, right? So what do we do with this? Do we hold this? Do we hold these prices? Of course, this is actually flatter. It's more like that. Um, do we hold this as potential resistance below the 28.1750, or do we push this 28.1750, break through the 28.20, and then start making our way back up into the 28.60, 28.70 area for new all-time highs? This is yet to be seen, and so. This is what we're looking for in a big picture. This will basically create a W formation, right? So boop, boop. If you're into patterns, I'm not, but I don't ignore anything. So this creates a pivot point right in this 28.16 area, which is just above us. We're just 16 points away for a W formation, which is likely to push us back into the upper end of the distribution here. Okay, or the upper end of the range. So that's the big picture. What am I looking for today? Today. So we're way up here. Need to crunch my charts down. Let's take a look at what we have for the current day. The current day has a market that has gapped up, as I said, and it's below mid at overnight VPOC at the 2800 century figure and showing a weak low. To me, this looks like an open auction, is very likely an open auction out of range for a potential push and squeeze of this low. Squeeze of this low and a move towards the 2786, which is the point of control of the 9th of November. We're templating the 8th and 9th of November. It's a good idea to go back to those days and take a look at what the market did. Do I have the wrong color here? Yeah, I think so. To look back and see what the market did. So an open auction that's likely to resolve down, and then we start to move towards filling the gap in, and then I'm looking for it. I'm expecting this gap to remain open down here, expecting it to have an impulse and to hold steady in this 2900 area. So that's the main scenario, is a drift down. I'm looking for a long against the gap. The market's likely to be responsive on the open. Secondary, remember, we're in an open auction out of range, so there's a higher probability of an open drive, open test drive, and kind of a driving behavior because the market's out of balance right now. We're out of balance. We're away from this big balance area down here. So the secondary is an open that moves down, takes out the overnight low, consolidates, pushes up early, and then crosses to the other side, pushes through this 2900 down here, crosses to the other side, and continues to squeeze shorts towards 2818. Look out for this area above here, likely to have a ton of stops, looking for a spike up through. Looking for a spike up through 2818. Be careful up there if you're short. Okay, and then for a pullback and consolidation down here. So that's the secondary scenario. Look again, be careful. We're in a gap on news. Higher probability of an open drive, open test drive. So hands off, no matter what this morning, hands off for the first half hour. Hands off for the first half hour. It's just not smart to bet early. Yes, we're taking price risk for more information doing that, but we need to see who's in control before we decide to stick our necks out and put our money on the line. I will be watching for the first 20 minutes to a half hour. We do have some economic releases. Remember, at 15 minutes after the open and a half hour after the open anyway. A good day to stand by and see what the true intent is. Is this news that is sold? In other words, do we go back to the scene of the crime? Or is this news that carries forward and is initiative? In other words, moving away from that 2750 area and towards 2900. I'm not here. I don't have a crystal ball. I'm not here to tell you what the bigger players are going to do here. I know that there's some weakness overall, uh, despite this run up. You know, their GDPs have been down globally and so on. So overall, I'm not sure how the market's going to respond. So I'm going to wait. So that's that. Good luck today, and I'll catch you tomorrow. Take care.